Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. What's driving these new market highs, and what's next for the stock market? Those are the two questions in front of our panelists, Editor-at-Large Steve Reitmeister, Senior Market Analyst Charles Rotblatt, and that top market technician, Kevin Matris. So it's interesting because it seems like this is an on-again, off-again saga. The market runs up for a few days, then pulls back for a few days. So apparently the momentum overall, because it gained on the week last week, we're talking here today on the 14th of September, overall momentum still going upward, still making new highs. Charles, what are the drivers to these new highs?
Well, there's two things. It's fear and greed driving the market. I think on the one part, we do have greed, and that's why we're seeing stocks going higher. I've talked before about it being a hot potato market. It really is a small group of traders moving the markets. And one of the things I want to show, and back of me, it's a chart of SPY, which is actually the spiders, the ETF that tracks the S&P 500. Mm-hmm. And one of the things you notice on there is not only is the index actually new highs, but if you actually look at the bottom right-hand corner, you'll see that volume itself has been trailing off. And we're continuing to see light volume. And even last week, volume was just terrible, even by recent standards. So we're seeing fewer people actually trading the ETF and really trading stocks in general. At the same time, we are seeing stocks going higher. It's not to say there isn't bad news. We're seeing the economy continuing to get better. We had FedEx pre-announce some good numbers. Texas Instruments came out and actually raised its mid-quarter guidance higher. But by and large, we're seeing fewer people actually be involved in the stocks at the same time the stocks are rising higher. The interesting thing, though, is if you go over to the bond markets behind me, we actually had a very successful auction of 30-year treasuries. The bid-to-cover ratio was 2.92, which according to Bloomberg was the highest level since November 2007. That means the number of people wanting to buy bonds far outnumbered the number of bonds actually being sold. That's a sign of fear. So we're seeing the two occur, and it's really something that's paradoxical. It's not something we should be seeing at the same time, and it really means one of the two or both markets need to do something. Either we need to see more people move into stocks. I heard someone say on CNBC this morning that money market funds have the same balances as they did a year ago, which is a little concerning. It means a lot of people are sitting out. Or we need to see bonds pull back. And you can really make an argument that maybe bonds themselves are in a bubble when you consider the amount of money the government's spending. Mm-hmm. But when you look at stocks, you have to wonder, why are we seeing signs of the economy getting better, but we're not seeing more people invest in the stock market? That does suggest some people are a little bit concerned that maybe the rally has run too much too fast and they're waiting for a pullback.
Are you among those concerned?
Well, I do think we'll get a pullback, and what I really think is we should end up in a trading range, and I've been saying that. But I do think right now there's a lot of people who want to see Dow 10,000, and I really do not know what the upper and lower level of the trading range is. We've had a lot of people sit out since the spring, and at some point when you look at the money on the sidelines, there has to be the reality of, yes, the worst is over for the economy, and we are going to be a period of slow growth, and I think some people are going to need to allocate back to stocks. Mm-hmm. That being said, there already has been some allocation towards stocks as we've seen the markets get to new highs. So I think what we'll end up saying is probably a prolonged trading range with really sector rotation in that range, and maybe some of the groups we've seen leading stocks higher right now won't be the groups really leading the market higher. So a bit of churning, probably some type of pullback at some point in the market. But I think by and large there will be a case to be made for people to stay invested in stocks.
All right, let's bring in the man who doesn't seem to be worried about too much, ever. Kevin, what are the drivers here that's pushing these markets higher?
You know, the market is a price discovery mechanism. The market is always trying to figure out what price will be accepted by the traders and what price will be rejected. I think to put the recent movement into perspective, you really do have to go back to the dumps that we had seen earlier last year and this year. You know, if you were to look at this year, everybody was selling everything in the stock market because people feared the economic crisis was going to be a lot worse than anybody had expected. And that's why we saw the market make such a spectacular lows in March. But it turned out to not be so, and we saw the market rebound nicely. What's interesting is that while the market is up over 56% from the lows in March, the majority of that move has been to simply undo the losses that we had seen when everybody thought the economy was going to be left for dead. So if you look at this year, while it's true we're up 56% from the lows, we're up only 15% on the year. And if you look at the price for the S&P, for instance, we are right now where we were back in October of 2008. So you have to ask yourself, is the economy better now than where we were in October of 2008? And aside from unemployment, I would say that all of the economic signs are showing that we are in a better position than October of 2008. And if you do look at the unemployment rate, while it's true it is at, 9.7%, jobless claims have been showing a nice trend of improvement, which suggests unemployment should soon be improving as well. So I think that the recent pullback that we had seen, people are putting everything into perspective and saying, okay, yeah, we have seen a nice move so far, but this is where we were last year at this time. Are things better off now, and is the future brighter than what it was back then? And I think people are coming to grips and saying, with a resounding yes, yes it is. So I think that the market is going to continue to try to probe the upside, and this is why all of these pullbacks seem so shallow, and we see the market trying to trek higher.
All right. What concerns you about the day-to-day of the market?
I don't know if I have necessarily any strong concerns, but yeah, it's a battle between the fear and greed out there. That's a good way to put it in. And it's not, I think that most people are in agreement that the economy is recovering. So it's not that people are saying that the economy is we're going to stay in a recession for a longer period of time. What they're concerned is, how high can the economy get? In other words, how strong is the rebound? And this fear of a double dip far out there, or what does it mean to have so much government debt and funny money printed up? And so, in other words,
debt especially.
So when you look at the near-term horizon, the economy is improving. I mean, almost every single metric you could take a look at, hard to argue. That's why the market has rallied so much to date. But how much higher can it get without a clear understanding of how strong a recovery are we going to have, and what fears are there that it may not last because the other things that we built in here and all this debt. So that's the struggle that's going on. But clearly the economy is going higher and rebounding. That is why stocks are rebounding from the lows. And I think of Dow 10,000 the same way I think about gold at 1,000. It's got to be touched. Doesn't mean it's going to stay there. Doesn't mean it's going to go jumping over. But I think that the market kind of wants to touch that. And then I think we're going to settle back for a while and see what the real fundamentals tell us where the market should be. Yeah.
Well, we've already touched gold 1,000, so now Dow 10,000.
Right, but you saw how it kind of retreat. It's not advancing past there. That's
right.
Which is kind of my point. Yeah.
Right. So now, after having laid all of this out on the table, what's next for the stock market? I'm sure that's the next logical question.
I think last quarter everybody was saying that the second quarter was going to be the most important quarter ever in the history of quarters.
Right.
And yeah, it was important, but my contention back then was that Q3 was probably going to be even more important. And I think that as we get into Q3's earnings, I think that this is going to ultimately dictate whether or not we see Dow 10,000 or Dow 10.8, which is what I'm really expecting, or whether or not we pull back. Because Q1, Q2, a lot of companies were surprising and beating expectations on the bottom line because of cost-cutting measures and this kind of thing. But you cannot keep doing that forever. At some point in time, you're going to have to see real sales growth. And I think that if the companies start reporting only bottom-line beats and they're not able to show any real top-line improvement, I don't think the companies are going to be as rewarded as they had been in previous quarters. But if the companies are able to show some real sales growth, if they're able to show some beats on the top line, then I do think this could be the catalyst to get us to 10, to possibly get us past 10 to 10.8, and that's where this price discovery will kick in. Does the market accept it or do they reject it? But that's what I think we have to look forward to going forward.
All right, Charles, what's next?
One thing that's interesting when you look at where the earnings estimates are coming in at, we're seeing some sectors that I wouldn't expect to be happening to when you're looking at the third month of the quarter. We just had FedEx pre-announce. I'd be curious to see whether or not that carries over the other transports, but I'm noticing basic materials, companies like DuPont, Dow Chemical, Freeport-McMoRan. We've recently seen estimates being revised up there. We're also seeing with several financial companies where we're starting to see Wells Fargo, for instance, J.P. Morgan, we're starting to see estimates being revised up there too. So some industry groups which you might consider to be a little bit risky given the uncertainty about the economy, we are actually seeing estimates being raised for both this year and actually next year. So it does seem to be that some of the economy is being priced, some of the economic rebounds starting to be showing up in private forecasts, and analysts are feeling more comfortable with it. That could be a good sign. But I do think we're going to head to a point where we are going to have some sector rotation, and I think that is going to throw some money out. And I think some of the people who have been chasing some of the hottest stocks right now without a pure fundamental reason to be in those stocks are going to get burned, whereas we see some of the other companies where there has actually been a consistent story of recovery, those stocks might continue going higher. But I do think we're going to get to a point, though, where we hit a certain point, we pull back, then we sell in the trading range, and when that happens, that's when we're going to start seeing the sector rotation happen. And it's going to be tough for some investors.
Steve will give you the final word. What do you see as next on the market saga story?
Yeah, the third quarter earnings, I think, is the most important one because all the second quarter earnings had to do was say, you know what? Yeah, we didn't get worse than the first quarter, okay, which was an easier mark to beat. Now, if you take a look, the earnings estimates over the last few months have gone markedly higher. Almost on every industry group, they have gone higher. So the expectations are now there for not just cost cutting, but for actual revenue improvement to drive the profit improvement. Here again, but not looking for like here gangbusters, but just some sign of actual growth and not just stabilization. So I think the market will start to stall out here in the next few weeks, okay, kind of lock in and say, okay, third quarter earnings, what do you got for me, okay? And then depending on what we see in that, it's going to move the market quite a bit. I will say that in the good camp, FedEx always coming out kind of early. You could say early or late, depending on, but I'm saying with their numbers just coming out and them showing some good signs, and they're one of those kind of groups that tells you a lot about a lot of different industries, okay? So they're shipping a lot more goods, and their estimates are going higher. That's a good precursor that we might have that growth we're looking for throughout the rest of the companies, which could fuel the market higher.
All right. That's the latest thinking from here on this market story that is ever evolving and ever changing. With everyone here, Steve, Charles, and Kevin, I'm Terry Ruffalo.